Good afternoon, traders, and welcome to this week's market analysis class, Monday, the 12th of February. Before we get started, as always, please understand that any advice in today's session is of a general nature only, and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's happened in the markets this week, and we'll start off with the US dollar. US dollar had a really good week. It traded better than all the majors, all bar the yen. The major reason for this is I don't know if you all heard or seen, but there was a major stock market crash, or shall we call it a correction. So technically it's being called a correction, not a crash, but the amount that has moved is significant. We have seen that when markets tend to go out of favor and they do come down drastically or crash, that the investors tend to move their money towards cash, particularly US dollar cash and also the Japanese yen. And from the two, usually the yen outperforms the US dollar during those times. And so that's why the US dollar has performed better than all the other major currencies, except the Japanese yen. And if you don't know what I'm talking about, if you have a look at this chart here, this is the Dow Jones index, and I've highlighted there a candle in where is it, just over here in the yellow, and particularly this was the biggest single day movement ever for the Dow Jones. It dropped over 1100 points, and you can see that there was a very slow, if I was to show you a larger picture of this chart, which I don't have right here, it's just steady up, steady, and then in like 3-4 days we gave back profits from like 5 months, half a year's worth of profits. So usually when this happens, investors tend to lose a little bit of faith with the market, and they're reluctant to jump back in straight away. So the recovery process can take a little bit longer. This is just a natural thing that happens. It's important for me to also note that with currencies, it's rare that you will see a sell-off as hard as with stocks, because remember, with currencies, it's a comparison of two different economies. Unless one economy is doing something drastically massive and the other one is doing like the totally opposite, the movement is not as exaggerated. What can happen though with Forex is because it's leveraged, it can be magnified, but the single movements definitely happen larger with stocks, and it's pure fear. When fear hits, everybody just offloads. With currencies, again, it's different. It's just a comparison of one versus another, whereas with stocks, they can literally freeze them, and then they just stop trading them at market, and then you're left with these stocks that are worth nothing. And for anybody who's ever invested in any particular company which has gone defunct, you will understand exactly what I'm talking about. Okay, so US dollar, very strong week last week. Sterling was actually the currency that was the most affected by the stock sell-off. The cable lost a massive 400 pips for the week. So the cable is the GBP USD. Also, as a highlight of last week, the Bank of England did deliver a monetary policy which was quite hawkish in its nature. They kind of hinted that there was perhaps room for 2 rate movements for the year. And even with all this positivity, the GBP did lose a lot of ground last week. If we look at the Aussie dollar, last week we saw soft retail sales. The trade balance data was soft also. The RBA monetary policy was about as neutral as it gets in reality. All this, basically, investors didn't see any need to continue to push it. The Aussie dollar had been pushing up quite significantly also last week with the US dollar strength. Basically, we saw the Aussie US lose around about 300 pips. We did break down below the 78 handle. It did recover, and we'll have a look shortly where we're trading at the moment and where the opportunities lie. The euro last week had a great weak against all the majors except the yen. Major reason, again, exchange related. But with the euro in particular, we'll have a look at it closer. When it broke down, when it closed below the 124 level, it really did accelerate down. And I think we have touched under the 122. The euro had been quite resilient to the US dollar, but it has succumbed, and we'll have a look at the charts in one moment. In terms of the data this week, let's have a look at what we've got and what to look out for. We'll start off with the US, and there's a lot of data from the US. We have retail sales, CPI, crude oil. We have PPI and also building permit numbers all due this week for the US dollar, so keep an eye out on that one. The UK, we have CPI and retail sales coming out on Tuesday, tomorrow, and on Friday. From Australia, we have our employment rate and change numbers, and also Governor Lowe will be speaking towards the end of the week. In terms of the currency that is probably going to be the most affected by data itself, and just the same as last week, as we predicted, and it certainly did not disappoint, it was the GBP USD. It is again this week, so please be alert of these times. They are in my local time, which is Australian Eastern Standard Daylight Savings Time. All right, guys, let me bring forward my charts and we shall kick off. If you do have any questions, please, if you've gathered them during the week, paste them in. Otherwise, type them in and we shall start off, and let's have a look at what we can do with these ones. All right, let me kick off with the Aussie dollar. Just give me one moment while I set up my charts. Okay, here we go. So Aussie dollar. Well, I've been looking for sort of points of interest where I could possibly do something. It wasn't quite a double top when we were up at this level. Not quite. That level was a little bit higher than here, but it still held and it did its thing. We didn't trade this. So I was looking at the 61.8 Fibonacci retracement, which is a retracement from this bottom point all the way up to there, and then kicking back to here. It got close. It didn't quite get there. It's kicked off a little bit. The other significant area that I want to show to you, I've just drawn in this baseline. We've got one touch, two touches, three, and I'm looking to see what happens if we approach it or when we approach it. At the moment, where we currently are, I don't really have anything decent to aim at. Probably the highest probability type of trade that I can see is if this was to keep going up a little bit more. If it got to about here, and at that point, if it delivered the price action activity reversal patterns that I like and headed in this direction, that would be a relatively good percentage trade for us. Right now, where we currently are, I'm not willing to go in that direction or the other one. So what I'd like to see it pull back, and it's not really, we couldn't really say it's a new trend or something, but it's a retracement pulling back. If we do get what we want there, and I would feel confident that we would be aiming towards this line, and there would be enough room there for us to possibly take that type of trade. Okay, so that's what I feel with the Aussie dollar. Right now, as it stands, I don't have anything. We're waiting for a pullback in the upward direction, and let's see if we can get the price action so that we can possibly take a short. Let's look at the Euro USD. Okay, Euro USD. It broke up. It was being very resilient above that moment, but as soon as we got to this candle here, it has stepped down. In terms of significant data this week, there really isn't much. What from a pure chart point of view, what I'm noticing is I'm keeping this line over here. I feel that this line may act as a springboard for the continuation of what is emerging as a trend. I'm also looking at any price action right there to see if I can get anything off. So let me zoom in. I had a quick look before. I didn't see anything, but let me just have a quick zoom again. Okay, it's unfortunate. There's no actual setup for us right here. If you're very aggressive, and let's say the candles finished exactly as they are, tomorrow you would see a fractal here, and you could say that this is a body engulfing over here. But since the body of this one is so little, it's not traditionally what a proper body engulfing type situation would look like. In theory, it is correct, but it doesn't look quite right. So I would hope what would be nicer is if this current candle dropped down a little bit more, and then tomorrow we get a candle inside it, and then look at the trade in the other direction. Okay, so that's what I would like to see. Let's see what forms, or it'd be even better if it came down to this line and then at this level here gave us the price action that we wanted. That would make it even a stronger signal, because this is a significant line that has previously acted as resistance, which may now act as support. So Euro USD, let's sit out and see how the next candle and the ones after form. But what we're looking for is we're looking for the continuation of the trend. I think the trend is still intact. You look at your high points, they're getting higher. You look at your low points, they're getting higher as well. Okay, so it's the trend still intact. Let's see what it gives us, and if it gives us an opportunity to continue trading with the trend. Let's have a look at the US yen. Okay, did anybody trade the US yen? Last week I was talking about the possibility of getting a pullback kind of trade there so that we could aim it back down, and should we break this congestion that you could stay on the ride for a lot longer. There was a very aggressive, when I was looking, let me just count back candles. So this would have been Friday, Thursday, Wednesday, Tuesday. So we would have been here. So when I was talking last week, I believe that this probably was still an inside candle, and I would have been looking for the next day this type of candle. So I didn't pick it up, but what did form was this is a body engulfing in the downward direction. Okay, now it would have been aggressive there. I did talk about if you don't feel there is enough room for your targets, don't take it. And this would have been such a case because you would have entered your trade here. Your target, your first target, your one-to-one target would be there. But as you can see, it's actually less than one-to-one, because one-to-one actually puts you at about here somewhere. So I was just checking to see if anybody saw that, thought about it. I didn't call it out on the chart of the day because it didn't meet the criteria, but I just wanted to explain that the market did still push towards this line as we spoke, but I didn't quite get the right setup to enter it from the beginning. So where does this leave us now? Well, it leaves us with an inside candle forming on a level of congestion. You can see here that I'm showing you we've come to this area a couple of times. We're here again now. So let me zoom in and I'll highlight it for you. What we currently have right now is these two candles are an inside candle. So should they stay like that, or should I say the red one right now, should it stay inside of the other one? Well, then tomorrow, if we could trade the break of the candle on the upside. If we break the downside, well then obviously cancel out your trade. It's not valid. Okay, and the type of trade that you're doing here is you're trading inside congestion. All right, and it'd be a simple, straightforward inside candles. Anybody have any questions on that particular setup? There it is. I'll show it to you again from a distance. Market's been trading in this zone for a while. We are at the critical section again, and we are on the cusp of producing an inside candle, which will give us a trigger to become a buyer. Okay, if it breaks on the downside and you get a big breaking candle like this, well, then also you can consider the breakout trade in this direction. Okay, but we won't know that until 9 a.m. tomorrow when this candle finishes, and at that point we can see if it's going to give us the opportunity to buy or to sell. All right, so add that one into your hot charts. That is the US yen, and of course I'm looking at a daily chart. Let's have a look at gold as I progress my way through. Now remember, keep your support lines, your resistance lines on your charts, because they do become useful and they remind you very quickly of what you're looking at. I'm leaving mine there. We've got 2 touches, so obviously whenever I get to this, if I get to this level, I'll be definitely interested in taking this type of trade. We're not there. I don't think it's going to happen this week. Let me zoom out and let's have a look at more things that I could find on this particular chart. Oh, okay. There was a. Oh, this is an inside lookalike. It looks like it's an inside candle. These two over here. But the red one, the wick of the red one is slightly higher than the wick of this one, which basically makes it not an inside candle. So when I first saw it, I got a little bit excited because I would have had a trade, but it's not. Let me see again. Let me have a quick look at a 4-hour chart. Okay, there's something here that I just want to highlight to you. When I first look at this chart, my first instinct is we're trending down. And I'm looking for a trade down straight away. Okay, so that's my first instant instincts that I see. But then if I have a closer look at this point here, if you notice, let's map out all the lows, all the significant lows, they are going lower and lower. But look at this low here. This low all of a sudden goes up. So this is the first sign that, oh, are we changing directions or are we going into congestion? So that's the first thing that I noticed. The second thing is, look at the highs. The highs should be dropping more or less as well as you go along. And you can see here that they're dropping down. But over here, again, the high has gone up. So all of a sudden, if you actually look at it, this section here is actually starting to look the opposite direction, like we are starting to possibly maybe go in the upward direction. So if I was right now, this is an inside candle, okay? So, and I've probably got about a couple of hours before this 4-hour candle finishes. So if it was to finish like this and I took this trade this way, the probability is significantly lower than had those things that I just highlighted not been there. Okay, it's actually showing more signs that we could perhaps be starting to go in this direction. I just wanted to point that out. I just saw it and I'm just sharing a thought that I had. All right, so on a 4-hour chart, there's nothing. So on a daily chart, there's nothing either. Okay, we've got to sit this one out, guys. Gold, we sit it out. Oh, incidentally, our gold trade hit full targets. Did anybody take them with me? Remember, I think it hit it through the week. We took the trade 2 weeks ago. The trade was this 2 candles over here. That one there. It was an inside candle at a resistance point. If I go back in that direction, you can see the resistance. We took a while, but we hit full target. Can I get a show of hands? Who took this trade with me? Anybody? No one? Anybody take it in demo mode? Can you guys still hear me? Am I talking to myself? Okay, thank you. A couple of you took it in demo mode. Good. At least you're following the trades. It's good. All right. So I understand gold is one that means you have to put a little bit more risk on the table due to the nature that the smallest increment is basically costing you $1. Okay, so I understand that. All right, so this week I've got nothing for us on gold. There's no setup, so we just be patient and we just move along. Let's have a look at the GBP USD. Okay, GBP USD. Let me zoom out a little bit more. Okay, it looks like uptrend, right? Give me 1 second, I'm just checking something. Did anybody by any chance take this setup to continue in that direction? Did anybody take that? I did not see this one. I believe that if I had seen it, I probably would have taken it and I would have got stopped out, but I didn't see it. There was lots of other trades happening last week, so I didn't see it. When I look at this now, I'm forming another inside candle, and if I'm looking at trend, I'm interested to see if tomorrow I've got the possibility of trading these two candles, and then it would be the break of the candle in this direction. So add this one to your hot list. Incidentally, we took a trade. This was the chart of the day today, and I already hit my first target. Did anybody take it? Give me 1 second. I'll show it to you. Let me change. I need to change. It was on a 4-hour chart. So, okay, so the way it works is, let me change colors. This was the setup. These two candles is a fishing strip setup. Now, because I trade quite a few accounts, this particular account that I'm on, I put the trade in a little bit late, but the entry was here. When the candle opened, the stop was there, and you can see there's the little red mark. Okay, so this is the distance there, and at that point there, which you can see my trade there, I hit T1. Okay, T2 would be at about there, so I don't have T2 on this account because I just took a minimum trade just so that I can monitor it. We haven't hit T2 yet, but we have hit the first target, and of course the way that I'm doing the daily call charts statistics is when I hit first target, I am moving the stop to break even. So this is already showing the worst case scenario for this particular one is that I've hit target one on half the trade. The other half of the trade, worst that can happen is I get stopped out. Did anybody take this one this morning? I have been doing the daily call way before 9 o'clock, so everybody should have had an opportunity, provided you watched the video before 9 o'clock yourself, to be able to get in when the candle opened. All right, so that's that. Let me change my template back to where I was. So add this to your hot list, and hopefully maybe tomorrow we can get another one over here in this direction. Okay, so I will look out for it, and let's see what it looks like in the morning. Okay, so if it looks really good, obviously when I do the chart of the day on the daily call, I only pick, if I get 3 setups or something, that's rare, but if I do get more than one, multiple setups, I will usually pick the one that I feel looks the best and has the highest probability for me. Okay, so I won't post 2 up, I've just been posting 1 up. Okay, and if you notice also that gold trade was not on that because it wasn't part of the daily call. That one happened on a Monday class. So the Monday class numbers I haven't been tracking. I'm just because I'm talking them through with you. All right, US CAD. US CAD. Why have I got this line? Oh, okay, that's why I got the line. Friday, Thursday, Wednesday, Tuesday, Monday. So that means this had already happened, so we didn't take it. We could not take advantage of it. Okay, I'm looking to short here. I'm looking to find a short if I possibly can. But I don't have a setup, and today's low has already gone lower than that. So I'm not going to get a setup over the next couple of days here. But what I was looking for is if I could get the price action there and then try and sell into this swing. Okay. Okay, so let's. I think the CAD last week had these big candles because their employment numbers missed the mark significantly. So it produced a couple of big candles for them. All right, so CAD this week, there's nothing there for us. Let's move along. Let's have a look at oil, WTI. Okay, classic setup is setting up here. Continuation of trend. It is a big dip. Let me zoom out a little bit further. It's a deep. This is deep. That's what I'm referring to when I say deep. It didn't happen up there, but right now this is setting up as a inside candle. Let me check. I want to check. I get the feeling that this might be the 61.8 retracement. Let me check it. It's just through it. Well, let me choose a different point. There's a bit of confluence there as well. Okay. So if I'm picking, because we're trending up, so these points are the most significant ones as I'm going along. So I'm picking from this point all the way up to the top, and then I'm noticing that this level, this line here, is occurring at the 61.8 Fibonacci retracement. So even though it's a deep pullback, this number is quite significant. Often we can get a bounce there. So if I get price action occurring at that level, well, then it gives me a second reason and a little bit more confidence that it could in fact bounce and continue in the direction that I'm showing. So what I'll do is I'll definitely add this to my hot list, and then tomorrow, let's say if the current candle, which is the green one, if it was to finish exactly like it is right now, that's what I want. Tomorrow, I will get a little fractal over here. And then tomorrow's candle, as soon as I break the high of today's candle, that would be my trigger to become a buyer. Okay, so this one could be set tomorrow morning. So make sure that we add this one to our hot list as well. So this is WTI oil on a daily. All right, let's have a look at the Dow. Remember I was telling you about the Dow Jones biggest drop in a single day historically? Well, you can see how long it's taken, to get up to this level, and then all of a sudden, like in a matter of days, we've chopped off this much out of the market. Okay, it's a significant movement. The market is quite volatile at the moment. So all I wanted to do is, I know we've been looking at the Aussie 200. Our index tends to follow the other major exchanges globally. The Dow, of course, is from New York. So I can't trade this right now. The only thing if I want to speculate, I can speculate, okay, and then feel free to do so. But I don't have a significant reason to trade this. But I'm going to put it on my alert because there's probably a lot of people of the mindset that the market will recover, okay? So when there's a mass consensus like that, I'm looking for candle patterns to basically display their psychological emotions, and when I see it, I'm happy to take a short ride because I need their momentum to basically assist me with the trade. Okay, so there you have it. I just want to highlight this one. Just let's add it into our portfolio of markets that we watch, and let's see how it develops from here. Okay. All right, let me move along finally to the Kiwi Dollar. Okay, Kiwi Dollar from I guess, hunch point of view, I really want to short the hell out of the Kiwi Dollar. I don't have a reason to do that other than a hunch. Okay, so when we got that big red candle last week, this one here, I was really disappointed because I felt I missed the boat. But now that I look at these patterns right now, let me get rid of these lines. Now I believe that it's setting up to give me an entry that I'm possibly looking for. Okay, so what I'm going to be looking for is the following. Give me one moment. Let me just drop into a 4-hour chart just temporarily. Okay, so if I really wanted to get on this trade right now, what I'm looking for straight away is I'm noticing these tops are getting lower and lower. So I also notice that here I'm at a level of significance. Pretty much anywhere in this region, if I can find price action reversal patterns, that's it. That's my entry, and I'm on the trade. Okay, so it's given me an opportunity by breathing back. It's given me an opportunity to enter into this one. If you want to do it off a daily chart, let's have a look at a daily chart. Off a daily chart, well, essentially what we're looking for is we're looking for it to happen there. Now, I do have to tell you in advance that if I do get the price action that I want, let's just say I get something that looks like, let me just rub that out, and let's just say I get a candle here, there, something like this, and then I get my red candle over here, and fine, that's it, that's what I want. On the break, I want to trade. Now, if I do take such a trade, it's not really trading with a trend because I haven't established a trend. Although if I do get 3 more candles like that, what you'll notice is that these 2 moving averages will start to come together and they possibly will be touching. I'm just taking a trade and I'm trying to jump it a little bit earlier than what I would normally jump it. But this is a risk that I'm happy to take with this particular pair, and I really can't justify it other than everything that I've just said. So at the very least, I'm going to wait for some kind of a signal for the market to show me that they're willing to become sellers. I'll jump on. The good thing is if I do hop on and it does start to come down and it breaks this level here, well then usually those types of trades I just hang on for as long as I possibly can. And those are the ones I need 1 or 2 of these trades a year, and they can get me a lot of reward when they come along. Okay, you yourself will have hunches from time to time about things. Rather than just acting on them, what I try to do is I try to look for a little bit of evidence to support my decision. Okay, so and if this is something that you're going to do, this is something that you should also have as part of your trading plan that explains the reasons why you've taken such a trade. Because when you go back and analyze it, you think like, well, why did I take this trade? There was no reason to take this trade. I got stopped out or I made a profit, doesn't matter, but there was no reason to take this trade. Why did it happen? Okay, your trading plan should address those scenarios. Okay, so there you have it, guys. Any questions, please type them in. Let me go back and recap. Let's have a look at what we've done. Aussie US dollar. We're kind of in the middle of places. If we can come down to this 61.8, we can look for buys. If we can pull up, we maybe, I get the feeling that this market is going to start to converge on itself a little bit. Euro USD. We're looking to continue to move with the trend. We're just waiting for a setup to show up, and then we'll continue with that. US yen, tomorrow we've got to wait for today's candles to complete. If it completes as an inside candle, we've got the setup to be buyers on this particular chart. Gold, we said there's nothing happening for us, so we're leaving it. GBP USD, if you took the daily call, you're still in a trade based off a 4-hour candle. But if not, let's look at the current candle tomorrow. We could get an inside candle to continue a trend. Okay, US CAD, we're looking for opportunities to sell into it, but it doesn't look like they're going to come along. This candle pattern right now has already spoiled everything, but let's just wait and see what happens. WTI, we are on the 61.8 fib retracement with an inside candle. We just need it to finish the way it is right now, and then tomorrow morning we can trigger here as well. Dow Jones, we just added it to our hot list, to our chart watch, shall I say, but there's no activity on this one. Finally, Kiwi Dollar. I'm, from a personal point of view, looking at any excuse to sell into it. I don't have it yet, but let's see if it shows up as I've just explained. Question, what moving averages am I using? Yeah, this is my staple. It's a 24 and a 12, and they're both exponentials. Okay, a 12 exponential and a 24 exponential. It's just a simple way to define trend for me. So when they cross over, I can technically say that I'm in uptrend, and this is why I was just trying to explain that I'm actually trying to sell when it looks like I'm in uptrend. Okay, so the everything I described to you about the Kiwi dollar goes against things that are logical, but I'm just explaining that sometimes you do want to do something regardless and you have a hunch, and this is the way that I'm looking for the trade in the other direction. Okay, hopefully that answers that question. Any other questions, guys? Does anybody want me to have a look at a particular market before we wrap up for the day? Incidentally, while you type up any answers, if anybody wants to track the daily call, give me 1 second and I will show you where you can go and do it. If you just go to csctraders.com.au, this is updated as the trades happen. Okay, if you go to the signal center and the daily call, you can come here to watch the video every day. It's usually ready before 9 o'clock. So if I click on here, it'll play today's video, but also here on the right hand side, should I say, you've got all the statistics here, every trade, including this morning's here, the 12th of Feb, GBP USD, and we've already hit the first target, and I've got the second target still open. So the worst that can happen is that I've already made 50, and on the second part of the trade, I make nothing. The best that can happen is I can make another 100, and also the full stats are here. So we've taken 13 trades for the year, 13 wins, 3 losses. That's a win ratio, and this is the percentage return based on a $2,500 account with $100 risk per trade, and that's the amount, the physical amount. Okay, so there you have it. You can grab it from here if you you can go back. All the videos have been recorded live, so you can actually see them as they've developed. That's something to help you track them along if you want to learn the strategy or you just want to follow them for yourselves. Okay. Someone's asking me about DAX. Yes, the DAX will be very similar to the Dow Jones. All stock markets have crashed quite significantly. Let me bring it over. Here's the DAX. This is the German index. And again, you can see it looks very, very similar. All right. So with these big movements just in the last week. All right. So when it's like that, all the activity just goes a little bit wrong, and it's very difficult to try and trade price action of something like that. So I just basically sit and watch on the sideline. But when it starts to the candles start to get into shape a bit better, makes it a little bit easier. Someone's asking me to look at Bitcoin. Let's have a look. I might bring the cryptocurrencies into it soon. I've been waiting for them to sort of stabilize a little bit. No, where is it now? I've got to find Bitcoin. Where are you? Here we go. Okay, so they're starting now. The candles are starting to get into more normality. Okay, so we had the steady rise, then we had the big crashes, and now I'll keep an eye on it. I'm still not willing to trade on it. What I'd like to see before I start to trade it is I just want it to move a little bit like this, and then that's it. Then I'm ready. Now, I'm not saying it's going to go up, but would like to see a little bit of swings in either direction, and then it starting to prepare for easier trading. Okay. Any other questions, guys? No, we all good? Okay, we'll wrap it up. We'll call it a day. Don't forget to keep watching the daily call. Every day, have a look at the chart of the day. If there's a particular trade that you like in there, feel free to follow it. If you have questions on anything, get in contact with us. Otherwise, I will speak to everybody next Monday on the weekly class. Other than that, bye for now.